This is Chip Maxwell, and you're listening to the Retire Smart podcast with David Brooks. From wine tasting to making the Inc. 5000 list for the fourth year in a row, David and the team celebrate growth, share candid lessons from scaling, and look ahead to new opportunities. Then they dig into Trump's executive orders on debanking and expanded 401k investment access, explore risks and rewards of private equity, and examine how data center construction is reshaping the job market, and why trades may be the smartest career path for the next generation. David, we do a lot of fun things around here, but one of the most fun is periodically we'll hold a reception for new clients, recently signed up clients. It's a wine tasting. We put out a charcuterie spread. We make sure that people are aware of the full array of services available to them. As clients at Retire Smart, we give them a tour. You preside over a trivia contest with fabulous prizes. It's a blast, and we just had another one recently.
Yeah, they're a lot of fun. And what I think was really special about this one is we had a lot of the clients that have onboarded at Lincoln here so far this year that came up and enjoyed it. And it's a great way for clients to invite potential referrals or friends they want to introduce to the firm. So it's just a fun night. I think we had about 40 people in total with employees here, and we do these about every 3 months, exactly giving our newer clients an opportunity to kind of come on board. And for our older clients, I'm sorry, I know, like, hey, why did I get invited to this? Yeah. It's just a way to introduce them. If you remember older clients, we used to do big Christmas parties, but it's just we can't do it.
We got too big.
We're just too big to do that. Yeah. But we do a lot of client events, and of course, we had the memorial event not that far back. So don't worry, we still do plenty of events for our current clients as well. This is just something we instituted about a year and a half ago. Every quarter, doing a kind of a new client mixer, if you will. So it's been well received, and it's a lot of fun. And my wife put a lot of hard work into that spread and board, and it got some pretty good reviews.
In sports, they say the great ones play hurt. Your wife is still recovering from surgery. She's in here yesterday setting up the charcuterie board and making sure we string up some lights. We turn our classroom. We have over 100 vents, and classes and workshops, but we put up a few lights and some cocktail tables, and it's a lot of fun.
Well, I thought it was interesting. Yesterday, she was in the kitchen working most of the day, but she hasn't been around all year. This is the first day during business hours. On the weekend, she comes in with me a lot, but this, because of some medical-related issues, she was not able to be in the office for most of this year. And so I was counting up yesterday, I think it's 14 employees she has never met. And I'm thinking, wow. Yeah. And so she's like, who are you? Who are you? Yeah. Who are you? Yeah. Anyway, that was just showing you the growth that we've received. And of course, it's very exciting. We can announce today that we are officially Inc. 5000 for our fourth consecutive year. And from the folks at Inc. 5000, let us know it's about only 350 companies have ever had the honor of winning that award for consecutive years. Well, that's pretty special.
Here's the thing. Inc. 5000 measures the 5,000 fastest growing businesses in America every year. So to have a great year, okay, you qualify for it. But then to get on there a second year, well, you have to improve dramatically even on your great year, because now your baseline has moved up. A third year is I don't know how many companies have made it 4 years in a row.
Yeah,
but we are.
A couple hundred. And so it's a huge honor. We're truly blessed. But there's growing pains along the way. I recently had breakfast with a wonderful client who was telling me a couple of things where, hey, you got to improve this, which, by the way, we love getting real, true, candid feedback. And that is sometimes the problem when a business scales or grows is you run into some growing pains. And so but we've been so blessed. And of course, the mission is to help as many people as we can. So we're not going to stop. We're going to continue to push. But I tell our current clients humbly, we appreciate the candid feedback, and we'll continue to improve along the way.
All right, David, into the news we go. And here is the Wall Street Journal headline. Trump shakes up Wall Street with orders on 401ks and debanking. What is going on here, especially with the debanking?
All right, well, let's cover the debanking first. This has been going on for a while. The larger banks, and this was led from previous administrations, were a little difficult to get an account open for charitable organizations that leaned to the conservative side of the aisle. And I personally know this because I sat on a board of a charity, and we went to one of the four largest banks. I'm not going to shame them by name. Trump does shame some banks by name, so we could probably read those because they're actually printed in the article. But I'm not going to personally shame. But literally, 9 months of back and forth to get an account open. And the reason we had to go to one of these large banks is because we were going to receive donations in different cities, right? And so there has to be realistic regulations on these banks of you should be open to everybody, right? Like we just talked about, you can't discriminate. We have all kinds of anti-discrimination laws in this country. Look, if a customer wants to open a checking account, let them open a checking account. But the Trump got debanked, and that's what this article talks about, with some of his organizations, because after he came down the escalator going way back 10 years ago or so, hey, the powers that be did not want to make life easy. And so they did this, and, lawsuits may come about it. We'll see what's happening. So that's the debanking part. And that's just been realistic. That's been a lot of conservative organizations, churches, organizations have found struggles finding a particular bank. Now, there's some good news. There's banks that are going after that marketplace, and that's really going to be their focus. So flip to the other side of the article, and Trump shakes up Wall Street with an executive order. And this is, I think it's a good thing, but I think you should take it with caution. What he's doing is he's trying to allow access to the investments that only our accredited or qualified investors qualify to invest in. Private equity, private credit, additional investments that are not a ticker you can buy, on an app. In other words, so you got to understand is publicly traded companies, when I started Chip well over a quarter century ago, there was over 9,800 companies listed on the three major New York or American stock exchanges, the American Stock Exchange, the New York Stock Exchange, and the NASDAQ. Almost 10,000 publicly traded companies. Today, that number is less than 5,000 listed on all those companies, right? There's less public companies because the way the marketplace, so there are still these companies out here you want to invest in, but they're private, and the average citizen does not get access, and they have better returns over time. The downside is they're not publicly traded, so they don't have to disclose as much information, every quarter, et cetera. So there's some risk involved there, which is why you had to be an accredited investor to qualify to invest in them. So this is going to break down the barriers. Tony Robbins has been championing this move, just so you know, because this is how the average person can really acquire wealth. You can get higher returning assets, but you need to understand the negatives or the cons. Less liquid assets. You have to be in it for the long term. If you're investing, and I invest in some of this stuff. If you're investing in these type of investments, you need to have a 10-year horizon. You don't expect to get a dime back out of that investment for a decade or longer. But this is how true wealth is created in this country. We can all benefit, but we need to make sure these 401ks do their due diligence, and your provider, if you're an employer at work and they're going to open this up, they need to make sure they're giving proper education on this, because I would hate for someone to get into dire straits and have to take a 401k loan. We've talked about on the show many times. Well, they're not going to loan against those assets.
It's not a place you want to be.
Yeah, that's not an asset you're going to be able to get a loan. So it'll lower the amount you could borrow. You're not going to be able to have hardship withdrawals. And again, I hope people don't have to take this anyway, but just tread with caution. But the great news is this is how true wealth is created. So this is going to get more Americans the opportunity to invest like the wealthy really do.
So let me see if I understand this. So Joe Citizen, day trading at his kitchen table, used to not have access to this area of the market. Now he does.
Correct. In other words, you have to be an accredited investor. Like we have all these offerings.
Beware, because there aren't as many guardrails.
There we go. I haven't heard that one in a while, right?
In this arena, there aren't as many guardrails. So
Correct.
You're taking on more risk.
But you potentially are, and history shows, you will likely get more return, but if your time horizon is aligned. And again, Charlie Munger talks about, right, the power of compounding interest. The only thing you can screw that up is interrupting
Just get out of the way and let it happen.
These are the type of, and just, this is the Buffett model, right? So the Buffett model, right? How does Berkshire Hathaway invest? About a third of their assets are in publicly traded companies, just like we talk about inside your 401k. A third are in private companies, just like this is talking about. This is how they invest. And then a third of their dollars are typically in liquid, very liquid investments, cash, treasuries, et cetera. Right now they have like 32% in cash or cash-like instruments. But anyway, so this is how the wealthy actually invest. And in fact, households that have a net worth north of $10 million have over 53% of their assets on average in these type of assets, Chip. So it's a good thing, but again, tread with caution. If these things are not going to be in your 401k tomorrow, but within the next 2 to 3 years, you're going to start seeing these things roll out pretty regularly.
David, you sent the team a chart showing office construction trending downward and data center construction trending upward. What does that tell you?
Well, that's a little bit of a crisscross, and that's just telling you where where are the jobs going to be in America, right? So obviously COVID changed the landscape on offices. We talked about that and how much in trouble banks are on the loans, and we've had the keys being mailed in for these big organizations, et cetera. But the difference here is new construction is not rolling back. People are back at the office, but we're not building new offices. So people are retrofitting offices. Some offices right here, the old Merkel buildings downtown, the two copper, they're being turned into condos or apartments, right? We're seeing this change all over America. But what construction is flying off the shelves is data center construction. And of course, right here in the Midwest, we see this across the river, north of town, south of town, data centers and these big data storage facilities are being built at an alarming rate. So will those constructions lead to permanent jobs? That's the problem, is these data centers only employ a couple hundred people, not thousands of people like a big center of city. Like we're building, obviously Mutual of Omaha is building a tax incentivized high-rise. Will be the tallest building in Omaha. And of course, Mutual Home is a landmark company here. So we're proud to have them as our center city building. But will they fill the building, right? Will they actually use all those office space? Will it be utilized? The point being is the job market is changing drastically. And if you've got a kid out there, we were having this discussion at the wine tasting this week with someone, hey, my kid's a junior in high school. What should he be looking? Trades. Look at the trades. I mean, you want to get out and make money quickly? A journeyman electrician right here in Omaha that's got 5 years experience as a journeyman is averaging over $165,000 a year, Chip. That's a pretty darn good living that you can learn a skill. You don't have to go to college and spend a ton of money learning things, right? So we need 500,000 electricians today in America. We're short 140,000 pipe fitters. We're short 250,000 plumbers, right? So trades will not be replaced by AI in these data centers, at least not in the next decade or so.
Thank you for listening to the Retire Smart podcast with David Brooks. If you want to learn how to generate lifetime income, reduce your tax bill, and maintain your lifestyle in retirement, visit retiresmartpodcast.com and make sure to subscribe to keep up with new episodes every week.